prices closed at the end of last week, gaining for 2 weeks in a row. Let's kick off this morning with our regular Sunday commentator, Mr. Christoph Ruhl, Senior Research Scholar at the Center on Global Energy Policy at Columbia University. Good morning, Christoph. One of the top takeaways last week is the jobs report in the US coming in at 260 odd thousand on the expectation of 1 million. So well below expectations. Your thoughts on that? What do you take away from that?
Good morning, Jean. You have to wave your hand when you can't hear me because I have an unstable connection, it seems.
Okay.
But on the jobs, I found this funny, actually, the debate of it. But in order to appreciate it, to understand it, step back, in most countries of the world, when you have an economic crisis and you have unemployment people, you look at the unemployment rate. So somebody loses his job, gets unemployment money, and is registered as an unemployment person, and that shows up. That's true for the US as well, but the unemployment benefits are so low and not paid very long, so that many people don't bother to register as unemployed, or they lose their job, and after getting benefits for a year, they won't get anything anymore and don't register anymore. And that's why people look at something else to gauge sort of the employment state, and that's the total employment number. And what we have seen, so that's the background, what we have seen after COVID is that total employment fell by millions and millions, and still is now, don't nail me, but I think 7 or 8 million below where it was in 2019 before the pandemic. So that's why this is so important. The total employment sort of shrinks and goes up with recessions and crises. Now, as you said, it's also a good measure because many people look at it because it's monthly. It's not like GDP quarterly, and it's more solid data than GDP. So for April, the expectation was that employment should go up by 1 million, and it went up by 700,000 less. And then what I found funny was the immediate reaction was this classical debate with all the Republicans screaming and says, here you go, this is all your stimulus money. People to work this year, I'm getting stimulus money, I stay home on the couch. And the Dems, on the other hand, the Democrats saying, oh, here you go, the economy said big doo-doo is still in the doldrums, there's no danger of inflation whatsoever. We need more stimulus, we need more infrastructure money, we need more public investment. And so you have this incredible discussion going nowhere. And the truth is probably somewhere, as always in life, and it's complicated, somewhere in the middle. So you have, first of all, it's only one data point. So there are these occasions in which data is just completely wrong for a month for some reason or other. Secondly, I think it's probably
on that point, sorry to interrupt, Christoph, the data point of price elevation, the too much stimulus point is filtering through across a lot of commodities, right? It is not just the idea that people are getting too much, unemployment benefits, $300 a month, whatever. But we're seeing that price elevation, that argument against stimulus growing because it's impacting right across the price structure.
Yeah, this is the beginning of inflation, but that has to do more with bottlenecks. Here, the unemployment number, we're talking about too many workers, so the opposite of a bottleneck. And just to finish that story, I think the inflation, the bottleneck, and the supply chain disruptions we have to talk about, because that, you're right, that is taking place. But on this unemployment number, I think it's somewhere in the middle. It's a bit of a sad story because what you have is the stimulus package is substantial for many people. It's $1,200 per month, tax-free. And what you see is that schools are still closed, summer camps don't take place, preschool childcare is impossible to get. So a disproportionate number of people who didn't join the workforce again were women, staying home because they still have to take care of the children. That seems to be a big part of the explanation. So in that indirect way, yes, some stimulus money because it allows them to stay home, but directly speaking, it's not a stellar sign of the labor force being fully employed or sitting on the couch. It is just a signal that the recovery is probably more uneven and will take a little longer than most of us have expected. And the inflation and the bottleneck point, I leave for the next question.
Okay. Jorge Montepecchio, welcome back, President of General Index. Jorge, we saw last week the sort of the very big draw on U.S. inventories, which sort of really propelled oil prices back up towards $70 a barrel. And we thought, okay, this was finally the moment to break out of the range. And yet it sort of got pulled back not quite above the 70. Your thoughts on what that inventory number signaled to you and the inability of the price to break out of this range?
Well, as a general comment, and good morning, Sean, and good morning, everybody. Christoph, I hope all is well in Germany and wherever you travel, the US and all these places. As a general rule, prices don't go up on a straight line or down on a straight line. So you're going to have a lot of flutter. But what is obvious in the past 5 months is that the flutter is to the way up. We have corrections, we have mini breakouts, and then followed by some downtime, but inevitably we're going up. So we almost touched 70, and as we know in markets, when you get to those numbers, you have a little bit of a fight as a lot of options price at 70 or 80 or 75. So you have pushback and pull in. And we almost got there and we got down a little bit. And then, of course, the Friday report is a very bullish one for the markets. As Christoph elaborated on the employment numbers, it sent a very powerful signal to the marketplace that interest rates are not going up in the next month or so, right? And that's like a signal that prices are allowed to go up, because all the traders are very concerned if there is a rapid rise in interest rates, because that would dampen demand. I am of the thinking that regardless of what the data says, if it had said that it's 1 million new employed in the US, still the central governments will be careful and not spike up interest rates, because they also have a lot of borrowings themselves. And they're very worried politically that they need to keep people employed. So I think the system is prime for a rise across commodities. It's not just oil, it's everything. If anything, oil is the laggard in this process. And let me give you an example here. The prices of lumber are rising like crazy, to take a very down-to-earth commodity, so to speak. If I am running a business very well, I want my truck that is supplying either a mill or out of the mill to be full to capacity, because I want to save on the cost of fuel. But if the price of lumber is rising so much, now I can afford to send trucks half loaded, because my profit on the lumber is so much that I can afford to hire an extra driver or to even do trips that I wouldn't do otherwise. So I think the system is all prime for energy, which is the connecting element between copper for mining or lumber to move the lumber, is the connecting element. And that connecting element is primed to go up in consumption.
On that point, Jorge, everything is primed. I mean, we're on the upward trend line, as you say, for some months. But ultimately, you painted your normal market when there isn't 8 million barrels of idle supply. And the big question I think the market's grappling with is how much of this sort of growth in economic outlook is already baked into this 60-something price point. And so we just cannot break out of it, no matter how good the news is.
Yeah. We are assuming here in the discussion we are having, and I think a lot of the people in the marketplace, that Saudi Arabia will continue to stay its hand and not release all the capacity it has available. And I think that that's the reasonable course of action for Saudi Arabia, because they know that if they restore output to the levels we had at the beginning of 2020, then the price will go down below 60. And they have budgets to take care of. So I think we need to put together in a box the rise in demand, which we are seeing already for a few months, the potential arrival of Iran in Q4, and very importantly, the policies of Saudi Arabia. If we put all of this together, the picture is still one of markets that are not adequately supplied, and therefore the price will go up. But I think it would be interesting to see Christoph's ideas on total balances. But to me, in all the indications I see is that balances lead to continuous inventory destruction.
Christoph, amongst the different factors in the jobs report last week, Christoph, was the US Commerce Chief citing a shortage of chips, microchips for the auto industry. And so they were having to close down production lines and so forth. We've been watching the microchip issue for some weeks now, but shortages appearing in different places, putting some stress on the recovery. Christoph, did you hear me?
Can you hear me?
I can hear you now, Christoph. Yeah.
No, I can. You're almost disappearing.
Okay. I was asking you about the shortages that we're seeing in the market, the shortages in emerging, including now shortages of seafarers because of the virus in India. 20% of the world's seafarers are from India, 250,000 of them, and they're now not getting picked up.
So it's always difficult to clean this up when people have these many moving parts.
Yeah.
Let's do a couple of things. Number one, we have to keep in mind the difference between inflation, which is a general increase of the price level feeding into itself, and shifts in relative prices. So the Jose's lumber truck example, that only works if the price of lumber goes up, but the price of labor not, then the guy can hire an additional driver. We are talking about inflation, which means everything goes up. Number two, where does it come from? We have to distinguish supply disruptions now in the recovery from general excess demand, overly strong demand. We're coming out of the pandemic where a huge amount of savings has remained in people's pockets because they were forced to stay at home. They were being paid by their employees or by employers or by the government, and they couldn't spend the money. And we're coming out of a situation where we have unprecedented spending by governments in many countries, in particular in the US. And we're coming out of a situation where for years now, we have the central banks printing money basically electronically and distributing it around as if there's no tomorrow, literally. And no inflation. So that's what people are coming from. They say there's this wall of money, this wave of demand hitting an economy which had no investments for 2 years, and it's going to overwhelm them. And that means generally prices will go up, then labor will go up, prices will go up some more, labor will go up some more, until either central banks throw the towel and raise interest rates, or until we have sort of ingrained inflation in the system, which is a big problem for the economy. Now, what we are seeing is not this effect here. Nobody talks about inflation before this fall or before interest rates rises before the end of the year. This is supposed to come at the end of this year only. What we are seeing now is bottlenecks that may or may not be a harbinger of a general supply shortage. And I can tell you, we talked about it here. I mean, it's getting totally ridiculous. Now the builder doesn't show up anymore because he doesn't get plates to fix the roof, because he doesn't get the packaging, which is plastic packaging made in some Belgian factory, which isn't delivered. That's a classical bottleneck. Right? The lumber story is another bottleneck but it's connected to monetary policy more directly, because there's this huge housing boom in the US. So they build like crazy because interest rates are so low and money is free. And in the US, most housing frames for private family homes are built from wood. So they don't have enough lumber, so they buy the lumber from here. So here in the middle of the Black Forest, I can't get lumber for a door. Gratitude, thank you to the Federal Reserve, ultimately. That's also a bottleneck, but it's already coming closer to this general situation of money printing. If it continues like this, and if employment continues very strongly, then the sum of these little bottlenecks, shipping is another one, when you have not enough containers. It's a classical bottleneck where in Egypt or whenever the Suez Canal is closed. That's a bottleneck, but if it becomes sufficiently general, it creates price increases which feed into other markets. So if the combination of the strong demand with all these bottlenecks continues, then by the fall, we will have an inflationary reaction. Now, on oil markets and on commodities general, it's a special situation. Here, there's not only general inflation like everywhere. It's not only the matter of bottlenecks like in building materials and white goods and stuff like that. There's also the possibility that people are worried of inflation, so they want to hedge their money. They want to put it somewhere where it doesn't lose value. And traditionally, real estate, commodities, precious metals, these are the hedges which people take. So it's quite conceivable that the price of copper has already some element in it, which is from people buying copper as an inflation hedge. They just say, let's let it sit there for a few years. It's not so expensive to store. And that could or could not affect oil. Traditionally, I think oil has not been very popular as an inflation hedge, surprisingly. And the reason for this is that the oil market is different from all the other commodity markets. It's so much more subject to political decision making. The current oil price, which I don't think goes up forever, but oscillates around the 6.
Christoph, I think we
It's
lost
just like you said,
there.
we have
Yeah.
8 million. You lost me?
Yeah.
All these pearls of wisdom.
No, I got most of them. It was just towards the end there. Perhaps maybe just.
So let me finish in one sentence.
Yeah.
Maybe the oil market is not a good inflation hedge. It's
Yes,
a bit
I got
different
that.
because it's so determined by policy. Look, we have, as you said,
Okay, lost you again. Perhaps turn your camera off, Christoph. Jorge, looking
as
at
many
India,
meetings as there are people in the back to work.
Christoph, I was just suggesting perhaps turn your camera off and then maybe create some bandwidth. Jorge, in terms of India, which of course is a big story as well, last week continues to be a big story. The oil markets, I think, have taken it in the stride, but inevitably it has impacted demand outlook and concerns for demand outlook. How do you think India plays out now in the coming week?
Well, let's start by the core numbers. The people in India, and I was just talking to some this morning, roughly say the overall consumption in India is about 4 million barrels a day. And talking to various people, the decline due to COVID is 10%, is 500,000 barrels a day, something like that, right? So we are going to have a hit of, say, 250 to 500,000 barrels per day. And we have seen that impact in the market with some Oman cargoes being reshipped out of India. And the traders report almost daily tenders to sell refined products that are now not required in India. But if you take the Indian situation in a global basis, it's actually a small temporal event. It's not structural, it's temporal. Because the two things are happening in India. The authorities, I think, are waking up to the gravity of the situation.
They are. How are you seeing that? I don't see that, but
the state governments are putting in place some lockdowns.
Yeah.
Maybe the central government is more interested in killing off Twitter or something like that, while the state governments are closer to the people and taking their action. But the most important element is that the people themselves are scared and taking personal action. Even in some cases that of the people I have spoken to, they're using masks while they are at home. So they're protecting versus their own relatives. So by definition, this is going to lower the infection rate in the next 3 weeks. So time will tell. But I think we are seeing the peak of the infection in India about now. and the peak in deaths will be within 3 weeks maximum.
I'm wondering about the impact of India beyond, and I think like you look at the UK decision last week in terms of the travel opportunity. It was an incredibly limited. You can go to Malta or you can go to the, I thought it was hilarious. You could go to the Falkland Islands if you want to. But ultimately, my point is, I'm wondering what the fallout, the unknown unknowns, at a very sensitive time in Europe and other places opening up, the India variant is starting to spread. We had today at one of my kids' schools, the first infection in the Dubai school for months. It hasn't been seen, and suddenly today, and I'm absolutely sure there's a big Indian community in that school, that the Indian variant has spread and is spreading. And the consequence of that at this time, I think, could start to resonate in other ways and enhance suppressed demand.
Yeah. Obviously, we're all reasonable, and we know that the answer to these things is a vaccine that provides protection against the Indian variant. Of course, we don't know. But so far here in the UK, the situation looks good. And another place that I keep an eye on is Singapore, where there are a lot of cases of the vaccine not working. And what I want to see over the next 2 weeks is if that percentage of not working is greater than 5%, because otherwise the Pfizer vaccine is not providing the shield we are hoping against the Indian variant. But the early results here from the UK, and I'm not a medical guy, look good in terms of the infections, people in hospital, and people that have unfortunately passed away. And the government, I think, took a very conservative approach in only allowing a few countries, including New Zealand and Australia, where we cannot fly to. They won't let us in.
Yes.
So it's almost a little bit of a joke.
You could go to Malta, Iceland, and the Falklands. It sounds like a summer holidays. Let's get the survey question of the day and give everybody a view on this theme. There's an important saying in the commodity market: the cure for high prices is high prices. Will soaring commodity prices derail support for more stimulus? A lot of this market, at least on the equity side, is elevated by stimulus and the extent that stimulus could continue. My question today is, will soaring commodity prices derail support for more stimulus? And we see the voices in the US saying, you know, the reason that people aren't making themselves available for work is because they're making more money from the stimulus checks. So will soaring commodity prices derail support for more stimulus? That's the question today. Christoph, looking forward the week ahead, some thoughts on what do you think could guide the market? As we said last week, the markets were rose on the back of the draw on inventories, didn't quite get above 70, came back a little bit. Your thoughts on the week ahead?
Well, you know, there are situations where you have a floor of the price, where you have a ceiling of the price, and then you can talk about a corridor. We are in a situation where you don't have that necessarily. I don't think anyone is planning that particulars. We have a center of gravity, which is somewhere between 60 and 65, which is defined by OPEC's willingness and ability to hold the line, and by the speed or slowness of shale and other private producers to come back. We should see that continuing. The world is just, the waters are still too choppy for anyone to derail it by big experiments. Number two, I think that we should take seriously this fact that we have now divisions in the growth rates in the world. So we will have some countries continuing to suffer. Next on the list, you just go through the logic of it. First Brazil, first South Africa, then Brazil, then now India. Next one will be Africa. That will not really dent the big aggregate world global growth numbers because these countries are too poor, but it will keep the rich countries on their toes, precisely of what you were asking. Every single virus mutant we have seen, from the UK to South Africa to Brazil and now to India, came from one of these places where the infection rates were going out of control because they didn't have the political will and or the money to protect themselves. And thirdly, we should see the water's not only staying choppy, but also getting a bit muddled by the kind of discussion which we just had here in the first half of this talk about what are bottlenecks, what is inflation, what is excess demand, what is normal and a difficult adjustment. We are in a situation where growth will be strong, but very uneven regionally, sectorally, and also in terms where these bottlenecks are. They are in some countries, they're in some industries and not in others. And then on top of that, we have this desire for people to hedge their bets against inflation impacting commodity markets. So I don't quite understand your question. Should probably be a question about general prices, but commodity markets will be affected by this inflation. So it's going to be difficult to sort out. And then I think people itching to go into the summer, so expect a very confused discussion, at least until the picture on the virus and on the bottleneck front becomes a bit clearer over the summer. And we will not know about the strength of inflation and therefore about the timing of an interest rate rise in the US before the fall. That's one of the few certain things at the moment.
The survey result is on the question of more stimulus and will the soaring prices allow more stimulus? My view is, will soaring commodity prices derail support for more stimulus? Yes. I mean, ultimately, this has been a year of recovery based on government spending, fiscal and monetary. And as prices reach records upon records, as Jorge, you mentioned on the idea of lumber, it has quadrupled in a year, lumber prices. It seems impossible to me that politicians will be able to push through more policies that will continue to elevate the commodity complex. But Jorge, your thoughts in particular, week ahead, Iran talks in Vienna, 4th edition started on Friday. Signs remain positive, their impact for the markets going forward?
Yeah, I think the underlying market demand remains very strong. Everybody's watching what is happening in Iran, but the addition net to the market is fairly small, so will be absorbed. Several of the Indian refineries already signal that they're going to buy more crude in June. So demand is coming back from India if you look at it from a forward basis. And therefore, all on track for 70 by the middle of May, which is almost here.
Which is in a week or so, if you want to consider it by definition. The outlook for the week ahead, of course, or we saw last week, inventories was a big accelerator for the price midweek. Should we expect inventory numbers of that scale to become regular now, that scale of draw, 6, 7, 8 million barrels?
I think that's a little too much in the US. So probably next week we'll see some draw of 3 to 4 million barrels in that vicinity, because numbers correct. Like next month we'll see a big labor addition because numbers this week were kind of wrong. So the same situation with crude oil inventories. If on 1 week the draw is too high, the next week will not be as high. But we are trending in reducing that inventory every week. That line also has not changed since the beginning of the year. Inventories are just going down globally. And this is what is providing this bullish underlying element to the market, right?
Absolutely. And the question then becomes, when does the supply come forward? Thank you very much, Christoph, as always. Jorge as well from London, Christoph from Germany. Really appreciate your insights. Everybody have a great week ahead, and see where those travel corridors end up. Hopefully you won't have to go to the Falkland Islands for your holidays. But if that is your destination, you may have to book early because it'll be a crowded trade. All the best. Thank you so much. Have a good week. Cheers.
Thank you.